Boom shalakalaka. Hey, it's 9:15 in the morning. Do you know where your pips are? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen, my name is Wayne. And I can't see you because my glasses are so dirty. Oh my gosh. Oh my gosh, there's nothing to clean my glasses with. Oh no. Anyways, I think it's fingerprints with pollen. Ugh. Dirty, extra dirty. So hey, wow, interesting day, huh? Yep. I hope you attended the live stream yesterday where we did Liberation Day together forever. Hope you enjoyed that. And holy smokes, market's up, the market's down, the market's sideways. Ooh la la. So let's take an opportunity to go through the technicals and see what's up. Wasabi. What do you want to do first? Dollars, yen, Swissy, or commodities, or crypto? What do you want to start with first? Let me know. Should we do a poll? Now, why don't you just answer? How about that? Let me get some coffee. Come on. Really? Nothing? Can anybody confirm that the stream is even working? It says it's working. Is there a mega delay? I don't think so. All right, well, let me check. Maybe your fingers are broken this morning. That happens from time to time. But I'll pull up. I gotta pull up. Let me go to YouTube. Oh, I see what's happening. It's running on a wrong day for some reason. How the heck did it do that? All right, well, I'll shut it down and I'll. All right, boom, shalakalaka. Happy Thursday, everybody. Hope you feel good being liberated. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. Nice to meet ya. Wow, you're liberated. How do you feel? Yeah, hey, markets are up, markets are down, markets are sideways. Why don't we go through them together technically and fundamentally? What do you want to do first? Gold, oil, Bitcoin, S&P 500, dollar pairs, yen pairs, Swissy pairs. Where do you guys want to start? Oh, I see what's going on. All right, interesting. From my point of view, I can't see the chat, but over there I see the chat that it's working. Interesting. Yeah, so it's weird. I'm watching the live stream to see the chat. Odd. All right, so hang on. Hang on. Let me go to YouTube proper, and I'll have to manually take watch the, and now I'm getting errors all over the place. I don't know what's going on. All right. Well, YouTube is throwing off errors for me. It looks like it's not working. All right. So I have no chat, no nothing, but I can see that it's working, right? Is it actually streaming? See, I can't tell any of these things. Knickerschnocker. Let's see what I can do. I guess I'll log in as a user. Is that going to work? youtube.com/@Forex.Today. And it looks like it is. It's running on Tuesday. What? So yeah, there's some weird glitch. There we go. All right, there's some weird glitch where to me it looks like it's running on a Tuesday. Well, actually it says Tuesday here, but it duplicated the stream key from Thursday. So I'm getting all kinds of weirdness. But at least I found where you guys are. Just in case you're not sure, it's not Tuesday today. So how did it do that? I don't know. But at least now I have chat. So let me pop the chat. Weird. I'm a weirdo. What the hell am I doing here? All right. Now can we try it again? Somebody type in 1, 2, 3. Because now maybe it's not even streaming here. I don't know what's going on. All right. Uche. 1, 2, 3. Muchas gracias, señor. Muy bien. Thank you. All right. Good. Well, we'll keep going then, huh? We'll keep going. So let's take a look. CAD yen. What's happening? Well, we're fulfilling our trade plan from a month ago. So yeah, it's all good in the hood. So we went up into the moving averages. Look at my predictive moving average. Oh, wait, you don't have the Wayne's predictive moving average to tell you where the moving average is going to be? It's where you aim. Oh, la, 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 la. Cool. What about Aussie? Same thing, up into our predictive moving average and down. Oh, everything is right as rain. Now, these are weekly, which means if you're on a 15-minute chart, you don't know any of this. is everything looks random and scary to you. From this point of view, it went up into the moving averages and dropped on a roll reversal as it should. Oh, in the direction of the central bank that's raising interest rates. Right as rain, y'all. All y'all. Oh my gosh, right? Who's going to start paying a heck of a lot more attention to the weekly chart, huh? Anybody ready to make that commitment? Who's on board? Or do you like the chaos and the madness? Oh my God, I just found a Bell and Rock alligator. Oh, look at that. Wait, yeah, huh. So I can take, and I just happen to have my Bell and Ross here. Oh, look at that. I can get rid of that diving band and put on an alligator. Huh. Well, hell's bells. I should go and look. What else is in this drawer? Huh. Well, hell's bells. I didn't even know. All right. Great. Okay, how about our weekly Kiwi yen up for a month and so far down for 2 weeks? Current target is down here at 82-ish. We're still at 85, still 300 pips below us. We were at 87, so it's already dropped. It was at 87.50, so it's dropped 250 pips with another 250 pips to go. Oh, but you like scalping 20 pips at a time, huh? Okay. I know I'm pissy today. Sorry, man. I'm not getting enough sleep. Oh my God. Sorry. My bad. Sorry. But this trend has been going since last year. So if the markets seem crazy to you, you need to step back a little bit. All right. Now, what about euro? Now, euro's interesting only because it's the anti-dollar. And you're like, Wayne, what do you mean by that? Well, euro dollar is 40% of the entire Forex market. So if it's 5 trillion a day, 40% of the 5 trillion is just euro dollar. And much of that is just US dollar. So if dollar's weak, euro goes up. If dollar's strong, euro dollar comes down. That's it. So look at this. We've been all over the monthly pivots here. Up, down, sideways, nothing's happened. But what is the direction of this prevailing trend? So, for those that are members of TRADARS, we organized our thoughts before this news event, and we had a hit list for risk on and a hit list for risk off. So, on and off. And we identified, let's say, just 2 or 3, 3 or 4 different opportunities depending on how the market reacts to the news. This was one of these. Okay. Now, if it was Aussie yen, Kiwi yen, all that kind of stuff, that was part of the off play. This is the on play. This is the off play. And off play was Aussie, Kiwi CAD. On is euro dollar or euro yen, pound yen, euro dollar, pound dollar. Cool. You're starting to see this. So now you're like, okay, pound is all over the place. Pound yen is going cray cray, man. It's going cray cray. No, it's not. Let me explain why pound yen is not doing anything unusual at all. You see this? This is the bullish buy zone. And if you're a bull, this is your target for the month. So it hit on the last week of that month. Okay, we hit the target and now it dropped. And if you want to be a bull, you need to confirm things with risk on first, but this is how you want to see it. I'm not saying you should, but that's for you to decide. But pound yen was part of the, if after all the news comes out, we move to a risk on scenario, pound yen up would be part of that scenario. If the markets collapse and we go risk off, not just for days, but for weeks, well, you wouldn't want to sell pound yen, even though it would be falling, but you'd probably be better off selling Aussie yen. Because when you add up all the tariffs on China, it's really 50%. And so if China slows down, Australia slows down because China buys a lot of stuff from Australia. But if China doesn't need a lot of stuff because they're not making a lot of stuff, then it's bad business, let's say, for Australia. Okay, great. So, you have to have contingency plans. And this is what we talked about before then. Cool. Good coaching. Yeah, I think so too. All right. Cool. Commodities. Do I want to look at commodities? No, it's too scary. Let's do exotics. Okay. USD Mexican peso went up for 2.5 weeks. And now it's dropping like a ton of bricks. Yeah. Do you know what the plan is? The plan is back in January. It's April, by the way. Back in January, the target was sell at 21, take it down to 16. We're only at 20. We were at 21. We're going to 16 according to this chart. Remember, it's just technical analysis. I'm not making a guess. That's just what it says. But that would be a risk on play. Oh, so what do you think? And I do know hedge funds that are heavily trading this. Cool. And what about the Rand? Nobody buys this pair, so you're either selling it or you're out. Or as they say in Canada, you're either selling it, or you're out. Okay, nice, right? Dollar weakness. Catch this carry. By the way, did everybody collect the dividend from the Wheel ETF? 60 cents a share. Beautiful. That's higher than a 12% annualized yield. Oh la la. Cool. Nice. Payday. Not bad, right? A payday, even though the markets are down. Hey, Richard, here's some money. Oh, well, thank you. Nice. Dude, that's pretty good. Think about that. That's more than 1% a month. Up, down, or sideways, 1% a month, 1% a month. Anyways, I think that's good. I think that's real good. Mm-hmm. So, anyways, that's public knowledge. That's public information. You can find those details on any financial website, Yahoo Finance. You can log into your trading account, your stock brokerage account. But it's all there. Cool. So, anyways, when I look at peso here, that's the reason that came to mind, the wheel ETF, is you buy Rand or you buy Mexican peso. Well, to say it differently, you use your US dollars as collateral to borrow even more US dollars. And then with this leveraged US dollar, you then invest into South Africa or you invest into Mexican peso. And then they pay you a return on your investment. And the only reason you would do this is to collect that return on investment. And then I think, well, wheel would be safer than that. Investing into South Africa, I think. I don't know. You'd have to analyze that. But I'm like, okay, that looks good, but I kind of like 12% on wheel. But of course, the benefit with Forex is you're going to be leveraged. That's what that whole, use $1,000 as collateral to borrow $10,000 in US and then invest that 10,000 into South Africa and they pay you interest on the 10,000, but you only have 1,000. You see, and now your internal rate of return is massive. But leverage is a double-edged sword. But yeah. So just think you're either down or out on these pairs. Yeah. Okay, you're going to see a lot of pivot points coming into play. Look at that. Okay, now let's switch it from weekly to month. And back. Good advice that you just can't take. So we knew we were here, our annual projected high. So I guess this is where I want to go here. The next step is interesting because my outlook for gold was conservative. We would go to 3,111. Okay. And my aggressive target is 3,222. It's actually 3,272, but whatever. And it's not really 3,1111. It's just easier to remember. But we are now in the zone of projected high. Now, this chart says it goes higher. But what if that happens later in the year? Like, that's the thing. We could come down for 3 months and then go up and then hit. Well, that's where seasonality might come in. So for those that are subscribers at TRADARS, you just pull up the seasonality. Not a big deal. Try to line those two things up. But nonetheless, we have hit target. Now, what happened last year? Well, around the same time, okay, we went up and then consolidated until about September, and then we went higher. So this could be up and sideways for 6 months, and then maybe up even higher. Maybe. depending on what happens. But good to know, right? Did you get the reminder email about the about non-farm payrolls tomorrow? You should have got the email about an hour ago, hour and a half ago. This is poor man's silver. Awesome, JP. Poor man's gold is silver, and bloodbath, definitely a breach of the trend line, or at least that one. But let's change the time frame and try to figure it out. Let's do our research. And we just hit, okay, we just hit an annual pivot point. And the target for silver is high as 40. We're at 32. Conservative target is 38. We just hit a pivot point. So if you were a bull, your thought process would be, hey, that'd be a great place for this to turn bullish. Okay. That's the weekly 21 EMA annual pivot point. So does it mean it'll turn bullish? Niet. Nada. Nova. No go. Okay. But what we can do is say, all right, market, I'm interested in this price of $32 to buy silver. I just don't know if I want to buy it now, but I'm interested in the price. It might fall further, more like 30 or even 28. But, you know, this is a giant, big, fat, 100% maybe. So now you can do things like drop into this time frame and look for bullishness using price action. Or if you're a little more sophisticated, okay, you would use traders.com. Mouse. Oh, it's not it, but we want, wait, what was I doing? Oh yeah, we were going to go use technicals. And we were going to go to commodities and say, hey, hey machine, do the work for me because I'm too busy or I'm too lazy or I'm too pretty. Huh? Or as Colonel Sanders said, I'm too drunk to taste this chicken. But what we want to do is look at silver, right? So let's go back and say, I only want to see silver. And you already know you're interested in buying, maybe. At 32 seems reasonable. And so now you can stay here and have silver look for the top 20 reliable, repeatable patterns that may be in the process of forming. So the patterns haven't even existed yet, but they might be building. And you are looking for bullish patterns. Do they exist right now? No, not on a 15-minute chart, not on a 30, not on an hour, not on a 4-hour, not on a daily. And there are many different kinds of bullish patterns that TRADARS is looking at on silver on multiple time frames, and none of them exist. So if you took the shot now, you'd be scalping or degenerately gambling. I bet you 32 holds. Whatever, bro. That's not a good trade and that's not a good investment. That's a gamble. Cool. So now you can just sit on this like Mother Goose. Yeah. That's cool, right? Now, what do you know? If you just sat here now, you are sitting here looking at silver, waiting for short-term bullish patterns that are recognizable, not something that your brain invented, but the machine recognizes. I think there's a slight difference. Maybe not. But it will say, oh, this looks like a bullish pattern forming on a 15-minute chart. That's your thing, baby. That's your bag. You do you. Now it's time to get serious because the 15-minute will turn bullish first, then the 30, then the 1 hour, then the 4 hour will turn bullish, and eventually the daily will turn bullish. But it'll turn at the 15-minute. You've already done some basic analysis, the weekly chart, and the annual pivots. This is big picture stuff. Suggest $32 is kind of an interesting price. Now you need other people to gamble and put the money in first so that we can recognize a change in direction from bearish to bullish at precisely your support level. Now that should tickle your fancy. Why guess? Doesn't make any sense. Why would you guess? Why would you gamble? Seems horrible. What a horrible way to run a business. See, remember, I want you to run your trading and investing as a business. You're a business, man. So how do you want to run your business? Gambling? Nah. So, are you thinking ahead? Are you going to buy the dip in the stock market? You won't find that here. Everything's going to be bad. I know, right? So, what are you going to do next? Isn't that the big thing? Look at this. 4.02. Oh, thank God. Oh, lovely. Lovely. Why am I saying lovely? The stock market's tanking. Dude, 30% of my portfolio is on this and it's winning. Why? Well, we expected the stock market to fall down in March. There you go. So it's doing well. I'm going to log in. Lovely. Update, refresh. Yeah, I guess there's a delay. But anyways, okay. Mm-hmm. Yeah, oil bloodbath. Holy smokes. Yeah, with the idea of the global economy. Yeah, crashing. Dollar came down, which is weird. Bitcoin came down. General risk off here, moving to cash, I would imagine. So I'm kind of interested in, holy smokes, maybe I can pick some of this up. Remember, the annual pivot point was 55.50. We're probably pretty close now to some interesting price levels if you know your fundamentals. So by the way, look at the green already. There you go, silver boy. All right, let's go to the US stock market. Okay, and S&P 500. Hey, where did my stop go? What? There's supposed to be a stop there. What the heck happened there? My stop. You know me. I like to have stops. Anyways, next level is 52.73. You know what happened there? So strange. No stop. That's not like the Wayne. Oh, I don't want to put the bloodbath on a mistake. All right. All right. So anyways, here's my thought. And I guess we have to go even further out to do this right. If I'm a bull, okay, I am allowed to consider 5,273. Do I love that number? No, I don't love the number. I like the 5550 better, but that's long and gone. But this drop here, 5275, if you want to call it that, 5300 if you'd rather, is a Wayne-Nachi, not a Fibonacci. Fibs are lies. Okay. I don't use the 3A2. I use the 33.33333. I also have an amazing sophisticated ratio of 1/3, 2/3. 1/3 from the top, 1/3 from the bottom, anything in the middle. What a sophisticated mathematical complex this guy's got. Oh, if you'd rather believe Fibonacci is magic and somehow the forces of the universe work with Fibonacci. Like, dude, seriously, it's so funny. What do I see? Yeah, a 50% would be most logic. Now, I don't want to see that. Ugh, that'd be terrible. Because if you're going to drop 50%, you might as well drop to 45, 55. And that's dropping us down to a 66% retracement peak to valley. Oh, I don't want that. But that could happen. So anyways, we'll go with plan A is maybe. Maybe here. You know what plan B is? Oh my gosh. We drop all the way down here. Oh my God. Oh my God. Really? Now, I don't think that to be true under current circumstances. But hey, man, you do you. I have 5% cash, 30% treasuries. I've already protected my assets from a major downturn. This is what we do at the Council of Investment Advisors. So we're fine. We're good. We're fine. We're good. We have the data. We talked about it. We analyzed it. We discussed it. We debated it. We made logical, intelligent decisions, and it's worked out just great. What's the big deal? What a neat group, huh? Where we actually do the work of professional portfolio managers with real cash. Yeah. Yeah, our account is going to cross over $100,000 this year. Isn't that nice? So, anyways, bing, bada boom. Well, we're not there yet, Osamu. Right? You don't. This is where I kind of want you guys to stop reading all media. I don't read any media. Sometimes people ask me, Wayne, can you go through your process? Like, how do you know so much about fundamentals? What do you read? Nothing. No Bloomberg, no CNBC, no Financial Business Daily, no Financial Times. I don't read blogs. I don't care what other people's opinions are. Not to be arrogant, most people are wrong most of the time. So why would I care? I have to make a decision about my money. I think of somebody, at Bloomberg with a journalist major, and they're they're writing about the financial markets. I'm like, I use the data. I think it was my first interview in the Bloomberg studios. I went there at night, which was really cool. I got to hang out with people in the Bloomberg offices and stuff. It was really great. We were playing around with their tools and stuff, and we're just talking and shooting the breeze, and it was great, just hanging out with the producers and stuff. Sarah Eisen, dude, she's cool. She's on CNBC now. Dude, we're just hanging out. Sarah Eisen and me and Carol Biaggi, right? So, anyways, um, in the cubicle, right? In the cubicle, there's a stack of Forex books. And that's the person who is writing articles about Forex. So here's how it works when you work at a company like Bloomberg. Oh, you just graduated from Columbia University with a $300,000 debt. All right, you're going to work for us for 60 grand a year. You're going to have roommates in a studio apartment in a bad part of Manhattan. You're going to take the train to work every morning, and you're going to write about Forex. So read these 10 books in the next 2 days, and now you're our Forex expert. That's how it works, y'all. So do you want to listen to that person and take their advice and manage your money around what you read on Bloomberg or CNBC or Investor Business Daily, or even worse, some blogger that makes money on YouTube ads? Dude, seriously. So, what am I harping about? Just download the economic reports, read them yourself, and make your own decision, because you care about your money more than anybody else. And I want your loved ones, your friends, your family to turn to you. Help me, Abdul. Help me. What do I do? Okay. And right now, you're going to read a lot of panic articles, end of the world articles. And maybe it is the end of the world. I'm going to bet otherwise. By bet, I mean use all the data at my disposal. Technical, fundamental. I'm going to lean on my coaching staff. How do I do this? How do I do that? And then I'm going to do some deep thinking and deep thoughts. Okay. And why is that important? Well, in the process, when we were up here, we were able to do things like go to 5% cash, 30% bonds. More than 1/3 of my entire retirement account is designed to buffer a downward move. And I did not read it, right? I didn't see it on TV. A YouTube guru did not tell me this. Cool. And everybody in the Council of Investment Advisors know all of this to be true. They've seen the account, they've seen the money, we've had the conversations, we reviewed the data, we made decisions, they see me invest the money. Very cool. And that's how you do it. So like stagflation, I don't know, Fed will raise, Fed will cut. Well, you know what? I don't know anything until I get the data. Okay, that's all I'm trying to tell you guys. I don't know anything. Somebody asked me this morning, what do I think NFP is going to be? How the heck would I know? I have no idea how the government workers are going to crank out the job data in less than 72 hours and do some math with some weird fuzzy logic and spit out a number. Is it going to be accurate? I doubt it. I have no idea what NFP is going to be. But I know 183,000, if you look at the 3-month average, and in particular, you analyze the revisions, I have a sense of what's normal. The second thing is, having looked at weekly jobless claims going back years, and then zooming in and just going back a couple of months, and then zooming in even more and looking at the last 4 weeks, I have a pretty good idea if we're going to be low, high, or average. So I have to watch the revision more than I do the headline because I have no idea the quality of the mathematics of the U.S. government analyzing 380 million people in less than 72 hours. How the heck could that even be accurate? Because remember, they analyzed the job market for the month of March. Well, they can't start until April 1st. And tomorrow the news comes out. Like, really? Did they analyze every company and every job for 380 million people? No. So they have to make phone calls. How many phone calls did they make? Or if it's the establishment survey, how many companies have they surveyed in the last 72 hours? Is it hundreds? Is it thousands? Is it tens of thousands? Is it hundreds of thousands? Is it millions? Is it tens of millions? I mean, think of it. If you analyzed 40 million businesses and people, that's only 10% of the economy that they're trying to discern. Could they, or do they do 40 million? No. Do they do 1 million? No. Do they do 100,000? No. So how many did they do in the last 72 hours? It's government. 12? They talked to 12 people? You know, like, so anyway, so what's the headline going to be? Who cares? What about the revision? What about the trend? What about the impact on monetary policy? You know, what about duration risk? Okay, yeah. You see what I mean? But I have all of this data. Like, we already did this. Like, it's amateur hour to say, well, what do you think about NFP? Oops. What do I think about NFP? Well, I'll go over this tomorrow, but I have lots of data on NFP. But before you get to that, you should probably look at weekly claims. And this is what I did earlier today. And so we already have all of that. We've already done all of this, right? Look, there's 90 months of weekly claims. Like, cool. So what's happening right now? Oh, well, we're in this little zone. Cool, right? So this is all at your fingertips. What about job openings, right? All at our fingertips. Okay. And what we're trying to get to is a fall in wage inflation. Do we have a fall in wage inflation? Well, good. Isn't it nice to have the data? Yeah. Oh, it's so easy, easy. Everybody's trying to please me, baby. Okay. Cool, right? So, according to our research, Kiwi is going to be weak and yen is going to be strong. And we've known this for a very long time. So, I hope you're on the clue train, my friend. Okay. Hope you're on the clue train. I hope you're not just making up your trading, that you're able to say, I'm bullish on this and I'm bearish on that and I'm very bearish on that. Right? Cool. So we're probably going to see quite a few score flips in the next 24 hours as more and more data comes in particular changes in technical trends. So we really need to sort things out. Okay, we need to sort all that out. US ISM services PMI drops to 50.8 in March.
Kiwi dollar US dollar jumps to near 0.5850 as the US dollar takes a hard hit after Liberation Day.
United States ISM services PMI came in at 50.8 below forecasts, 53 in March. March ISM services 50.8 versus 53.0 expected. United States ISM services new orders index 50.4 March versus previous 52.2.
United States ISM Services Employment Index 46.2 March versus previous 53.9. U.S. weekly jobless claims unexpectedly dipped to 219,000.
Market cycles leveraging seasonal trends with Octobroker. United States S&P Global Services PMI above expectations 54.3 in March, actual 54.4.
United States S&P Global Composite PMI meets expectations 53.5 in March.
Canada, services 41.2. That is bad. Wow. Oh my God, Canada. That is bad. Yep. I think they're going to have to do a deal with the Americans. Yeah, oil's collapsing, but that's been going on for 20 something hours, right? Anyways, holy smokes, Canada. Just that is one of the worst numbers I've ever seen from anybody. We'll take a look at their balance of trade. And we did this earlier this morning, we meaning the TRADARS group. We already reviewed this. If the actual is less than or if actual is greater than. And we already knew, having analyzed this, if it came out a bad number, and it did, there's no scalp on the Canadian dollar. It's really interesting. Having looked at balance of trade out of Canada going back years, analyzing every time frame on every dollar pair, in particular Canadian dollar versus the US dollar, and looking for reliable, repeatable patterns inside the volatility over the 2-hour period, 4-hour period, 12-hour period, and 24-hour, and even 48-hour period, there's nothing. No reliable, repeatable pattern in this result for at least USD Kitty Cat. But there's some, scalps going on. And what you want to do in this case, say, okay, this has nothing to do with the Canadian dollar. So let's look at congruency. Aussie dollar, no scalp, but it shows US dollar weakness. Euro dollar, scalp, US dollar weakness. Kiwi dollar, scalp, US dollar weakness. USD Swiss franc, scalp, US dollar weakness. USD yen, scalp, US dollar weakness. So in this scenario, at least on the shorter time frames, and it looks like even longer, we get dollar weakness. That's what's happened in the past. And so we could take a look, let's go at the 4-hour chart. And it's pretty mediocre, up and then drop. Okay. So show us the past. So according to this, pre-news, okay, these are 15-minute candles. It happened 2 hours ago. 85.7% of the time in the past, in situations in which Canada's numbers came out less than expected, then in that scenario on euro dollar over the course of 2 hours on 15-minute candles, 85% of the time it was more up than down. And what happened was it went up for about 45 minutes and then came down a little bit. So how did it get to that conclusion? Down and up, there's your scalp. Okay? And then up, there's your scalp. Okay? Down and then up, there's your scalp. Up and up, that's your scalp. And then this one went up, that's your scalp. This one tanked, but still closed, statistically higher than it opened, but still, not pretty. That one would have been a tough one. So really, I'd count that as maybe not so good. But this one, and this one, and this one, and this one, and this one is euro dollar on the days in which Canadian trade balance came out, and of which the news was less than expected, and then analyzing what occurred on euro dollar 15-minute chart. Yeah, something like this occurred. And it seems still to be happening, but we have a lot going on today that could override all of that nonsense, right? Because now, we got a lot more going on in the world than Canadian trade balance, right? Don't you think? How about 25% tariffs on Canada for making and distributing fentanyl to Americans? Nobody believes that it is even true. Huh? Go to Vancouver. They don't make fentanyl, they use it. Sad but true. Yep. All right. The numbers came in. Did very well so far today on my 20-year notes, which are going to be correlated but better duration than the 10-year. Yeah, and it's my biggest winner. Yep. My 20-year treasuries are the biggest winner chicken dinner. Hedging my downside risk. Yep. So anyways, good to know all this stuff, right? It's good to be informed. By the way, my goal for all of this data is that if you trade through TRADARS, use us for your execution. I want TRADARS to be free for you. I want to I want to work with you every day, and I want you to have all these tools. I want you to have all the performance coaching, all the training, all the fundamental radars, all the technical radars, all the sentiment radars. I want you to have all of this. And I'd like it to be no money out of your pocket. And we've started that process. So it's no longer a vision. This is happening. So for many people, this will be free or at least cheaper. But I hope you follow that vision. Yeah. Yeah. Go to traders.com. Get started. Okay. Yeah. You're like, Wayne, I thought you said it was free. No, it's $200 a month. If you use us to execute your trades, you get an MT4 account. You get my chart templates. There's even a couple of special things I haven't announced yet. But you also can qualify for rebates of $50 to $200 a month. So for most, it'll be cheaper. For some, it'll be, or for many, it'll be free. So what'll happen is at the end of the month, I'm going to send you $200 in cash via my PayPal account. Cash, not a credit to your account, because you can't eat a credit. So I'm going to send you $200 in cash. I think that's cool. Yeah, yeah. Cool. So once you sign up, then you just go over and uh, sign up for the rebate account. That's it. So easy. Yeah, so easy. So if you trade like 2 or 3 little mini lots a day, you're going to get $50 back from me. I'm going to send you $50 in cash. Yeah, right? What if you only do 2 or 3 trades a day, but they're 2 mini lots? Well, then I'll send you 100. How does that sound? Now it's half price. Okay. So I'm happy to say people are signing up and we are getting people set up. And I am working to use AI to be able to run all the reports, create all the new reports, and automate the process of me sending you money. So I'm spending money on developing processes to send you money. So I hope you get involved. Richard passed a prop fund challenge. Congratulations, Richard. Our prop fund, there's no test, there's no trial, there's no evaluation. Yeah, isn't that nice? So how does it work? You put in 5,000 or more, your equity goes up by 20,000. You get a rebate. So if you trade enough, all of this either becomes cheap or free, and you keep 100% of the profits. Okay? I want you to make money, keep all the profits, and have all of this for free. Pretty simple goal. Okay? So you have to upgrade your TRADARS account. Apply by giving us basic information. How long have you been trading? What's your style? Oh, Wayne, I like to scalp. Okay, whatever. And then you go through an interview process. I want to make sure you have the right principles and values. We just added this interview. Every single person going into the prop fund now will have to have an interview. But I'm building a team. So the team will now have a coach and a section of the website just for the team, including stop, look, and correct sessions where you have someone to turn to for advice and questions and training and help of any kind. And so you'll be joining that team. And so there's an interview process. And so the way that I do it is you have 14 days to get your account open and funded before we actually start charging you the upgrade fee. And you get a bunch of bonuses, which I didn't want to tell you about yet, but I guess I just did. So there's some cool things happening for those that are going to be in TRADARS prop team. So it's a $300 a month, but then you get a $300 a month rebate, you see, plus a bunch of other extra stuff. No test, no exam, no profit sharing. In fact, I send you money. Okay, that seems pretty good. Pretty good deal, I think. Let's read a bunch of articles. What's changed in silver? Well, we haven't got to the today's news, so this is going to work and read and read and read and read and read about silver on your behalf and tell you what people are thinking. But all of this news just came out yesterday since you were liberated. So it's gathering intelligence and formulating a bias now, a market bias, a market sentiment. And so over the next couple of days, you'll see these swing around. Lots of neutrality, huh? What do you think? Are we going to break above this apex? Oh, guys, don't thank me. Join the team. Let's go. I'm going to be your Harvard educated economist, and I'm going to work on your team every day. going through the fundamentals. Cool. So let's turn some of this off. I am not interested in the vol scenarios. I'm going to get rid of reversals, and I'm going to get rid of these breakouts and big moves. We know they're there. Those are for pullbacks and for counter trend trades, but the vol's too high. I don't even want to see it. So I'm going to say, show me support and resistance and psych levels, and show me trends. Okay, simple enough. And do I care about cross pairs? No. All right, let's do some quick analysis. Okay, this is a consolidation pattern with a prevailing trend. This looks like it wants to collapse back down to support. Not interested. This is trending sideways with the potential, but has not broken out, but a potential for a breakout. Pass. Not interested. And I'm already sick of it. All right, I'm sick of it. I don't want this stuff. I don't want that sideways stuff. Sorry, key levels, you're gone. You're fired. Get the heck out of here. All right. So maybe up, pass. Maybe down, euro yen. That looks interesting. Although, I've already mentioned this. I'm more bullish than bearish. But if that's happening, Aussie and Kiwi are probably coming down even better. Pound CAD passed. Euro on an hourly. Boy, oh boy, that still looks good. Aussie Swiss franc. Okay, I don't really want to buy Swiss franc right now, but that makes sense. That makes me feel better about maybe the yens. CAD yen is consolidation without. Okay, so anyways, pass. CAD Swissy, maybe a challenge of the down, but again, this pattern is non-directional. USD Rand, I'm good with this. This is bearish. I like it. And with the next leg is down, that's an opportunity. Love it. Aussie CAD consolidating. I'll pass. If it breaks out, I can buy a pullback, but I don't want to own Aussie or CAD, so pass. USD Rand going the wrong way, pass. USD Rand wrong way, pass. Euro Aussie, not really interested, pass. Aussie dollar, okay, maybe. We have a channel up on a 15-minute chart. Next leg is up. Could I buy a dip and play roll reversals? Yeah, so that's a big fat giant maybe. Euro Swiss franc down. Don't love it. Don't really want to do that trade. Pound yen to the downside. I see it. It makes sense. It's a 15-minute chart. I don't want to sell pound, so I think I'll pass. Up channel emerging. Oh, well, I might pass and come back later, maybe on a higher time frame, because I'd rather sell this than buy it. Kiwi on 30 minutes, a little bit better. Okay, a little bit better. So we can go down, okay, and then down. So that's a big giant probably. And then pound Aussie, yeah, I'm okay. I'm more bullish on pound and I'm more bearish on Aussie. This is an uptrend, which is great, but this is a threat to that. So I'll wait maybe later today at the London close.